Well, it has been a formulative year for generative AI and for the companies adopting these tools. Gen AI has also been making major inroads into the financial sector as people's finances. Our next guest is doing a deeper dive into how generative AI upended payment companies, credit unions, and financial services jobs. Let's bring in Daniel Wolfe, Content Director for Credit Unions and Payments at American Banker. Good to talk to you today. This is a very thorough report that you've put out, really looking at all aspects of disruption in the space. I wonder if we start with the cards, though, because you sort of laid out Visa as well as MasterCard. Even within that space, interesting to see how broad the disruption is likely to be.
Oh, absolutely. And these are companies that over the past many years have tried to reinvent themselves, not as just networks that money moves over, but as technology partners for the banks and merchants that they work with. So it's no surprise that they're investing hundreds of millions of dollars into artificial intelligence and finding use cases that are of immense use to all of these audiences. Fraud detection, customer service, programming, all sorts of things that they are investing in now and plan to continuously roll out in the year ahead.
Customer service, something that we have seen sort of that first use case for in Gen AI. But as you talk about fraud detection, I mean, what kind of integration are we talking about? And to what extent is that likely to help with costs for these companies that I imagine have spent but also lost a lot on fraud?
So this dovetails with another trend we're covering, which is faster and real-time payments. Over the summer, FedNow, the Federal Reserve's real-time payment network, launched, and that provides a second option along with something called the RTP network for banks and credit unions to enable real-time payments. Now, with real-time payments comes real-time fraud or the risk thereof. And that's the sort of thing that generative AI is very well suited for because generative AI is good at attacking problems where you need speed and you need scale that a human being may not be able to provide. So looking at a large amount of transactions, seeing the patterns in them and being able to stop them in an instant if they think they are indicative of fraud is a big deal for any company that wants to adopt real-time payments. And there are benefits to this as well. It's not all risk. They want to be able to allow people to pay their bills. They want merchants to be able to pay their invoices, to get funding from loans, government benefit disbursements as well. There's a lot of upside and a lot of appeal to this, but only if it's able to control the fraud as well. And so payment companies are laser focused on this problem and see generative AI as a tool to help them tackle it.
Daniel, the consistent concern around AI in general has been about how it's likely to eliminate jobs across sectors. I wonder what you found in looking at financial services and what kind of disruption we're likely to see, at least in the labor market there.
So it is going to disrupt that. It is going to eliminate jobs. You see Klarna already, which is a Swedish buy now, pay later lender, saying that they're going to be hiring only engineers and that through attrition, any jobs that leave, they're going to attempt to replace them with some kind of AI. Now, at the same time, you see AI being seen as an assistant or a co-pilot for jobs that exist and companies looking at ways to make their own workers more efficient, to make communication better across departments by allowing access to tools that didn't exist before. So you have it both ways. AI targets the jobs that are niche, single focused, laser focused on a particular task. And maybe there's even a skill that's dying off, like a particular programming language where experts are harder to find and you need AI to handle the translation of that into more modern code. That's a use case where a job might have been going away anyway. But also seeing it enable new opportunities for technology workers. Banking and financial services is essentially a technology industry. Goldman Sachs, a quarter of their employees are technology folks. So you see these companies already see themselves as technology companies, see themselves as technologists and tech vendors, and want to have that advantage that AI gives to them and their workers as well.
As we pointed out, Daniel, this is a four-part series, quite extensive in terms of the payment space. As you went through sort of the impact on all parts of the sector, what was the biggest surprise for you, the big takeaway?
The big takeaway, the big surprise was just how much these disparate ideas intertwined. Like we talked about real-time instant payments and the intersection it has with AI. We also, I don't think we talked yet, another article that we had in this package was about the next phase of digital wallets. Now, we all know Apple Pay, Google Pay, and those are focused on the point of sale and traditional shopping. But as we get into Web3 and digital identification and other uses of a concept of a digital wallet, we're going to see other companies come in and try and take over that space and maybe take over the roles that Apple or Google have today for consumers, for businesses, and so forth. And again, this is something that's enabled by the current wave of technology that we're seeing, that things like blockchain, AI are changing the expectations of what people have. And so they are enabling this innovation and also solving the problems that these innovations bring along with them.
Yeah, fascinating to see the shift that's happening there. Daniel Wolfe, American banker, content director for credit unions and payments. Good to talk to you today.
Good to talk to you. Thank you so much.